Welcome back to Walks on Wall Street. It is January 3rd, 2023. Kind of crazy. We're already in the thick of it in 2023. Now, today was the first official trading day of the year, so the U.S. equity markets were open. Now, if you remember correctly, last night when we were doing our Markets to Look Ahead stream, one of the things we were talking about is how the Chinese market, or the Hang Seng Index, was deep into the red. I think we were down about 2 points to start off the trading day. But if you remember, as the stream went on, the Chinese market actually fought its way back and closed positive for the day. And that actually carried over into the U.S. market as it relates to a lot of the Chinese ADRs, or the American Depository Receipts. They had an outstanding day on Wall Street. Alibaba up almost 5%. Pretty good. JD up almost 2% on the day and up 72% from when it bottomed back in October. So we're going to be talking about the Chinese market tonight. But just as a quick recap, first trading day of the year. S&P 500 down 15 points to 3,824. The Dow 30 down 11 points, 33,136. And the NASDAQ Composite down 80 points, 10,386. So we're going to have a varying number of topics tonight. We're going to be talking about energy. I think it's very important to pay attention to this energy trade. Notice how crude oil got hit today. Big. Futures contract, ticker symbol CL, down 4%, 77 bucks. Pretty significant. And we're also seeing the XLE roll over. Now, if you remember all the way back to our Miami live streams, we sort of talked about the divergence we're seeing, right? So think about the XLE. Ticker symbol XLE is the Spiders Energy ETF, right? So about 23% of that ETF is ExxonMobil, ticker symbol XOM. The other 20% is Chevron, ticker symbol CHV. Both of those stocks are breaking their 50-day moving average, almost cracking the 200-day. Now, Occidental Petroleum is another big oil and gas company that Warren Buffett invested a significant amount of money in. Stock's down 3% today, well below its 50 and 200 days. Look, guys, I don't know. I think this energy trade is getting long in the tooth. I mean, if you have crude oil, that topped all the way back in March of 2022, off more than 50%. I mean, it's either the stocks are going to catch up with the commodity, or the commodity has to catch up with the stocks. I mean, I'm taking the trade where the stocks are going to catch up with the commodity. I think these things are going lower. We'll talk about Apple. Let's talk about the dollar, the VIX, and also home builders showing some interesting relative strength today. Now, we'll talk about some reasons why, because you wouldn't think that home builders would be showing relative strength in an environment of increasing interest rates, right? We're coming off the back of 4 consecutive 75 basis point rate hikes with an additional 50 basis point rate hike. Fed funds rate, it's on its way to 50%. Why would home builders be doing well? I don't know. We'll talk about it. Let's close up shop here, team. Let's head down to the outside world. We're reporting live on 33rd Street, Madison Avenue. Let's take a walk to the west side. Let me get my backpack, and we will get started on the live stream. I gotta make sure I have my umbrella too. So allow me a minute. Let me turn off the jazz music. All right, let's head out. Team, let me say hello to everybody in the chat. I see Carl, Wendy England, Richard Vogel, Brick, Mar. I see Marcy M, Marilyn, Carol Reevy, Roman, Timelapse, Lemonade, Gregory, all of our moderators, SME Media, DWG, TC is here, Otto, DWG, Shady Cooper, welcome. All right, let's head downstairs. Let me just close up shop. Try to give you a quick panoramic view of the WeWork here. You have your kitchen area over here. Have your stairs. I think there's 4 specific floors I tend to hang out on the 6th floor. Hey, Ryan Beck, what's up? Good to see you, Nadij. Welcome, everybody. Oh, I think this... Oh, no, it's not broken. Thought it was broken. All right, let's head downstairs. Allow me a moment because the internet is probably going to go out here in the elevator. Preston, good to see you. Ryan Beck, always a pleasure. Harjot, thank you so much. I want to be GMO, welcome. Dusty Cole says, what's up, Tomcat? Hey, have a good night, man. Let's see if it's raining. No, it's not. Thank God. I thought it was gonna rain. I forgot my big umbrella, but I got the smaller one. All right, so team, officially welcome to 2023. I trust everybody's first business day of the year and first trading day of the year went fantastic. We are reporting live on East 31st Street and Madison Avenue. It looks to be a clear night, feels about 50 degrees. We're gonna be walking uptown to 34th Street, but then we are gonna be headed over all the way to the west side. Maybe we'll take a bit of a stroll around Hudson Yards. We'll see. Sally is here, welcome VS, good to see you. Michael, this is Tom is always prepared. Dan Zhang, what's up? Says, hey Tom, what a tough day for Tesla stock. Yeah, so let's jump right into it, let's talk about it. I would say first and foremost, does anybody remember, I think Ryan Beck mentioned this, but we've been talking about this almost to the point of ad nauseum on the stream. And that is the concept on Wall Street that the generals are usually the last to get shot, right? And the generals in this stock market, as it relates to the United States, are a lot of the big mega cap tech stocks. A lot of them have been decimated. To Dan Zhang's point, Tesla down another 12% today after that little bear market rally. But everybody, we've been talking about Apple, ticker symbol AAPL. We're like, look, if this thing starts to roll over, which it should, I think that could be the final or potential final maybe catalyst to unwind the market and shake some participants out. And we started to get that today. I mean, Apple down about 3% or maybe even 4%. Now, if you follow us on Twitter, if you follow @WalksWallStreet, I've been posting some charts showcasing Apple. Really quick, I want to show you guys this awesome view. I always like showing you this view here. East 33rd and Madison, Empire State Building, can't ask for better. But it looks like Apple's gonna start to roll over here, right? And Apple has really been the liquid leader in this market where a lot of institutions have really been hiding out. Now, this sell-off, I would say this bear market, has been, it seems as if it's been very systematic in nature and very structured. It hasn't been fear-induced. It hasn't been wild capitulation events. It has been very, very organized and systematic, very, very classic to a traditional run-of-the-mill bear market, where once the economic tides turn and we enter a new monetary policy environment, where we go from intense QE to intense QT, first we have the high beta growth stocks get knocked off. These things have been getting bombed, down 70, 80%. We check that off. Number two, then your mid caps start to go, a lot of the Russell names. And then at the very tail end, usually of the bear market, the market comes after the stocks that everybody thinks are untouchable, right? Your Apples, your Alphabets, your Microsofts. And a lot of market participants will start saying, how is this possible that Apple and Tesla and Microsoft are selling off? These are the best companies on earth. Like, how is this possible? And I would just like to remind everybody that stocks don't need a reason to go down in a bear market. They just go down. And this is why if you're running a long-short equity portfolio and you have to respond or you have to answer to a P&L at the end of the year, it is very important that you take prudent risk and you manage that risk. You cannot afford to ride these individual stocks down 70%. You got to cut your losses. Hey, Cynthia Beal, good to see you. Welcome. I see SME Media, Jay Einstein says thank you for the heads up on Apple trade idea. Jay, thank you for watching. If you look all the way in the distance here, you see the beautiful One Vanderbilt. I think I actually want to cross the street because once we get the light out of the way, you guys are going to be able to see a little bit better view. Hey, Julia M is here. Says Tom, they were overvalued. What's up, Julia M? How was your day today? Canales here says hello. Happy New Year. Good to see you, Ninja. Welcome. Flat Smack. DWG, welcome. Custom Built American Fire Trucks says hello, everybody. Hey, Custom Built American Fire Trucks. I think I missed a super chat from you, so thank you so much for supporting our work here on Walks on Wall Street. We're dealing with a new streaming software, so it's hard for me to read the comments, but I just wanted to make sure that I said that to you, so thank you so much. Ricky Ricardo says, Tom, Elon Musk lost $200 billion, the most ever. Yeah, I mean, Ricky Ricardo, you're right. Now, that's another thing we've been talking about, that Elon Musk, the owner of Tesla, founder of Tesla, is no longer the richest man on earth. The CEO of LVMH is now crowned the richest man on earth. So we have a little bit of a transition there. Now, as you guys know, I tend to abide by, or sort of the investment methodology that I follow the most and that rings most true to me is a methodology called CAN-SLIM. So CANSLIM. And one of the key rules in CAN-SLIM is not to buy stocks in a downtrend. And one of the things that I've been seeing quite a bit on Twitter and other places is, a lot of market participants are trying to catch the knife on a lot of these stocks that have just been totally blown out. I mean, Tesla, they're trying to buy that down 70%. They're trying to knife catch a lot of these SaaS stocks that performed really, really well during 2020 and 2021. And I would really, really advise against that, okay? We all know that usually 8 out of 10 stocks will track the overall direction of the market. And so if you're trying to, get crafty here and buy breakouts and try to size with big size into these names that have been getting crushed, you'd be surprised with how much of an equity drawdown you can take. So I would just say take some prudent risk here. All right, 5th Avenue, 34th Street. We are now directly across the street from the one and only beautiful Empire State Building with the Starbucks Reserve store in the bottom. Now, guys, speaking of relative strength in stocks that have been performing well relative to other stocks in the market, Starbucks is definitely one of them, right? Ticker symbol SBUX. YC says, I listen to what you're saying. It sounds like another language. Michael Carey, thank you so much for becoming a member and supporting us. Yeah, Ryan Beck says, let someone else catch the knife first. Agreed. Ratfink is here, welcome. Yeah, Ratfink says no stock is untouchable. I tend to agree with that. Austin City Limits is here. I see Dr. Longas, welcome. Julia M says it's blurry. Oh, is the stream really blurry? Hold on. Let me see if we're streaming in 1080p. Maybe I forgot to send it to 1080p. Hey, Ed T, what's up? Hey, 45 is here. Good to see you, 45. Now, I think what I want to do tonight is let's head all the way to the west side, because last night on the live stream, which I actually enjoyed a lot, thank you guys for coming out last night, we were walking Sutton Place. Very seldom do we ever get over to the east side, but talk about amazing views of the 59th Street Bridge as well as Long Island City. It was really nice, really, really nice last night. Jay Hot, welcome. Good to see you. Now, I think as of doing this video, Chinese market is open now. If you look at the Hang Seng Index, ticker symbol HSI, I think we're trading up a couple points. But I think what's more important, there's sort of like, I'm trying to think of the exact saying. And I'm gonna butcher it because I'm a little bit tired tonight, but I think it's very important for viewers to listen to this. Bear markets start on extreme pessimism, they mature on optimism, and then they die of euphoria. It goes something like that, but not, maybe somebody could put the exact saying in the chat. And I think now that we've seen a full market cycle as it relates to the US equity market, I think it's important to go back, right, and do a post-analysis and understand the different market sentiment and the different sort of market environments that we had when markets were going up, right? I think everybody remembers back in 2021, you would turn on CNBC and these guys would be hawking a new SPAC every day. There would be a new company going public every day. There was the meme stock and all this nonsense. Like, it seems like everybody was talking about the stock market. Everybody was a genius. Everybody was making money. And that is what you call the euphoric event. And that is how markets die. They die of that optimism. They die of that euphoria. And notice the transitionary period we have now. You know, very pessimistic. I'm not saying it's the bottom of the market, but a lot of that excess has been wiped out and washed out. And one of the ways that I sort of gauge that market risk or those animal spirits is by, you know, tracking the fund flows of a lot of those very high beta risky ETFs, like the Cathie Wood style ARK innovative ETFs, which I think that ETF was down again today. Here's another shot of the Empire State Building. Yeah, Wendy England says, I remember so many people were saying there was no top. You're right. Sparks Carnival says 2023 won't be bull or bear. It's the year of the rabbit. Have a flexible and choose stocks carefully. Have to be cautious but quick like a rabbit. Yeah, I mean, Sparks Carnival, you're probably not wrong, right? I think it's going to be a stock picker's market. Little Larry Sellers says the market giveth and taketh away. Indeed. Photos from around New York. Yes, that is it. Bull markets are born on pessimism, grown on skepticism, mature on optimism, and die on euphoria. Yes. Photos from around New York. Thank you so much for posting that. That is exactly what I'm talking about. Now, let's take that a step further. So everybody just take a minute, take a few seconds to read that comment by our good moderator, my good friend, Photos from around New York. And now take that frame of mind and apply it right now to Chinese equities. Now, I want to be very clear. I'm not suggesting anything, right? We don't give out financial advice. We just have a conversation as a collective of humans here on Walks to Wall Street. But sometimes I watch CNBC and they'll have some pretty big name fund managers on. And over the course of the last few months, a lot of fund managers and very, very notable PMs on Wall Street, by the way, have been coming on CNBC and saying things like, you know, Chinese equities are not investable. You know, fade this rally in Chinese equities. And you've actually have heard me talk very negatively about Chinese stocks as well, especially as it relates to the, accounting standards of some of the companies there. We did a deep dive analysis into the Luckin Coffee fraud, where they were cooking the books to the tune of about 300 million. Now, Luckin Coffee, ticker symbol LK, was delisted, trades OTC. But let's apply that same, and this is the front of Macy's, by the way. I'm surprised the Christmas lights are still up. I thought they would have taken them down, by the way. Maybe they'll take them down later maybe this week. But anyway, apply that same logic to the Chinese stock market now. So again, if you have TradingView or whatever type of trading software you use, I want everybody to go and put a 50-day and 200-day moving average on the HSI, or the Hang Seng Index. And we have now rallied 38.5% from the October 31st low. So the Chinese equity markets bottomed October 31st. We're now back above the 50-day, and we are now, I think, yesterday we managed to close back above the 200-day moving average, which is very, very key. Oh, guys, check this out. Is that a full moon we have? No, right? Maybe like a 99% full moon. It's a pretty nice shot with the Empire, though, and the moon. Hey, Gary Carpenter, welcome. Good to see you. Roman, I heard about that too. Silicon Valley was under a lot of flooding, which is definitely not good. San Francisco, I heard, was under flooded as well. Hey, Dr. Steve says, I remember Ackman crying end of the world on CNBC at the 2020 bottom, but he was already wrong. Yeah, so Dr. Steve, I think that is, so it's a good point. However, I just want to make a slight comment and maybe correction there. Now, if you go back and watch the Bill Ackman interview during the literal bottom of the COVID crisis, yes, Bill Ackman came on the TV very distraught, right? And he said, a lot of these stocks are going to zero, right? As he was talking about Hilton and Starbucks, if we don't shut the world for 30 days. But then if you listen to the remainder of the interview, he actually told everybody to buy stocks. He said, and then I got bullish. He's like, I think we're gonna get through this. I think we're gonna close the world for 30 days. I started to add to my position in Hilton. I started to add to my position in Starbucks. And he actually told everybody to buy. But I think this emotions were running so high during that time period. Ackman was catching a lot of heat for that. So I do have to I always like to stick up for him in that regard, because he did tell everybody to buy. Hey, the LT Prods is waxing gibbous 87%. Oh, they're just starting to take the... So I have a vertical bike? Here, we'll give you guys a shot of them taking the decorations down here, 34th Street. But anyway, I think we got to keep this on our radar, right? Because think about all the comments in the chat room right now as it relates to Chinese equities. Yeah, they're gonna go down. It's gonna roll over. I'm still skeptical of them. I don't know. Bear markets grow on the skepticism. Remember, read that post by Photos from Around New York. Now, I'm not saying the bottom is in for the market and these stocks are gonna run hundreds of %. What I am saying is I would not be surprised in the slightest if Chinese equities severely outperform this year by a wide margin. It would not surprise me, and I think we need to stay on top of that trend. Now, here's another thing I noticed today. As I was gauging which stocks were performing well, which stocks weren't performing well. A lot of the Chinese ADRs were performing really well. Alibaba up almost 5%. JD, I think, was up almost 5% as well. And these stocks are actually climbing back above their major moving averages. Stark contrast to a lot of the American tech companies and SaaS companies that are well below their susceptible moving averages. So I just really wanted to mention that to keep everybody on top of that. But I don't know, any thoughts about that potential long China trade. Any thoughts about it? Because I have all the same concerns you guys have. Hey, Mike C says, I just can't get myself to invest in an adversary like that. No, I get it. And I think for me, Mike C, to even expand on your point, it's so difficult for me. And I told you guys, I used to have a pretty sizable position in Alibaba, but I had to blow it out. And this was 2020. Because I can't afford to ride stocks down that much. And, you know, obviously everything that happened with the Luckin Coffee was not good. Let me know, guys, if we're getting a lot of wind noise in the microphone. Because if that's the case, I actually did buy, finally, a mic. And I may test it out tonight just to get rid of the wind. Hey, Dr. Longus says that sounds very optimistic on Chinatown, but I'll try to be open to it. Tom G, good to see you. The LT prods, so are we in the optimism and denial stage now? I'm not too sure. GGNYC says, yeah, a lot of wind. All right, let me... Dan Zhang says, Tom, I don't know about the Chinese tech stocks right now. There's a lot of rumors that they're going to do a lot of job cuts. That's actually bullish. That's actually bullish. When companies lay off people, less money they have to pay their employees. No, but I get both sides of the argument, but I think it's important to keep our eye on it, and as traders and investors, be open to it, right? Because there's nobody that talks about the down, I would say the negative aspects of investing in China more than me. But I think if they were held to the same accounting standards and disclosure standards as a lot of American companies do via the SEC, I think a lot more people would be open to it. Julia M says, wish I understood why energy does not do better. Are they only interested in oil? What about the rest of the investments in energy that companies in energy companies have for the future? Yeah, so let's actually talk about that. I think Julia M makes a good point. That was actually one of the topics that I had written down for discussion today. XLE. Now, if everybody types XLE in the chat, the Nightbot is going to drop a link. Hold on, let's wait for the police officer to go by. Hey, Matthew M, what's up? Good to see you, Matthew M. Steph UH. So we're now outside of Macy's. If you look all the way uptown, this is Times Square. But we are actually going to head to the Hudson Yards tonight. Hey, Pot of Gold, welcome. Alex, I see you. What's up? LL says, hey, Tom in room. Good to see you, LL. All right, so let's get back on track here. So if you type XLE in the chat, I've programmed the Nightbot to drop the link to the Spiders ETF sort of like disclosure page where you'll see the main holdings of that ETF. Now, notice the top two holdings. So everybody go to the link and scroll about halfway down the page where it says holdings. Now, notice the top two holdings in the XLE. It's a pretty massive weighting. So I think this is very important that we track these two stocks should anybody have exposure, a lot of gross exposure to energy or the XLE. So first one is ExxonMobil. The ticker symbol is XOM. It makes up about 23% of the entire index. Now, number 2 is Chevron. Ticker symbol CHV. Also makes up about 20% of the entire indice. So again, go to TradingView, throw XOM up on the screen, put a 50-day and a 200-day moving average on those two specific tickers, and we're breaking down. We've sliced, I think, below the 50-day on both of those stocks. Another one being Occidental Petroleum. Remember, Warren Buffett and his company Berkshire Hathaway made a sizable investment in Oxy. Now, Warren Buffett's much smarter, much wiser than I am, but I don't know. Occidental Petroleum looks horrible right now. Ticker symbol OXY. That broke down again today below its 200-day. I think these things could potentially be in free fall here. And here's the divergence that I think is important to look at. Did anybody notice the action in crude oil today? Crude oil was down about 4%. So the main futures contract that I look at, let me see if I can give you guys one more shot of the Empire before we head out. This is a shot of the Empire State Building outside of One Penn Plaza. Now, crude oil, the futures contract, CL, was down 4% today, trading at 77 bucks. And notice where it got rejected. It got rejected from its 50-day moving average and is in a steep, severe downtrend. And if you remember, we were actually live streaming the top tick in crude. This was back in March of 2022. So it's either one of two things are going to happen. It's either the commodity is going to catch up with the stocks, or the stocks are going to catch up with the underlying commodity. And if I had to bet, I think the stocks are going to catch up with the commodity and the stocks are going to come down here. I don't think we're going to see a rally in crude because of recessionary fears. So I think I want to turn it back to you guys and ask your opinions on this. Do you think we're seeing a sell-off in crude oil because of recessionary fears? And do you think that we're actually going to see a bottom in crude and then begin a rally again, maybe back above $100? Who knows? This is the New Yorker Hotel here. Very iconic building. Dan Zhang says, Tom, have you seen that natural gas just broke down below $4? I did not see that. That's another good thing to watch. Malcolm says, evening, Tom. Thanks for the views and your opinions. Thank you so much. Hey, Dallas F is here. Good to see you, Dallas. Thanks so much for joining. Charlotte Morales, welcome. Ryan Beck says, I think bottom isn't far from here, maybe 65. But yes, we may rally again. This is Ryan Beck. Jenny Trickett says, gas costs $2.20 in Wyoming. Oh my God. That is probably the cheapest I've seen in the chat. $2.20, that's fantastic. Let me try to read some of the comments here. Sparks Carnival says PayPal up. MCP says hello from the Dominican Republic. Welcome. Matthew P says hello, Tom, old chap. Good to see you. Con I am, what's up? Sparks Carnival says PayPal is up 5% today. Interesting. Yeah, I mean, PayPal, so I'm staying away from a lot of that stuff. You know, anything with a ridiculous amount of overhead supply, I tend to not even look at anymore, but maybe you could try to catch it for a quick bear market rally trade, but I think a lot of those stocks are cooked. Could be wrong, but we'll see. All right, let me give you guys a shot of Madison Square Garden. Check this out. We are now standing on the corner of 8th Avenue and West 34th Street, overlooking the fantastic, very famous MSG. It's lit up in all red, white, and blue. You know, Jenny Trickett, yeah, PayPal was strong and also Meta was strong today. Now, I'm actually watching Meta. I'm actually watching Meta because it has been a standout in this very, very weak tape. Very, very weak tape. E. Smith makes a really good point. So E. Smith says, Tom, have you looked at other commodities? Lumber has tanked. I have, and that's a very good point. Now, commodities in and of themselves are extremely, extremely cyclical, and they tend to undergo massive boom-bust cycles. And that is another reason why I'm very concerned about the crowdedness, I should say. In the hedge fund business, there is a terminology they use called crowdedness, and essentially that means when everybody is looking at the same thing. Now, I've been reading Barron's, Wall Street Journal, Financial Times, pretty much every weekend of my life. And over the last 3 months, every recommendation is about an oil and gas stock. And that is really crowded. So to your point, lumber has collapsed. A lot of these other commodities have collapsed and fallen off a cliff, which I think is going to put downward pressure on inflation, which is good. But at the end of the day, I don't know. I think we just need to watch these oil and gas stocks for a potential top. Jenny Trickett's housing is down, no demand. Sila's I don't know how to pronounce your name, but says, Tom, do you think that it is possible for Meta to completely fail? Yeah, it's possible for absolutely anything to be disrupted. And I think that's actually a really good question. Now, think about sort of what we talked about at the very, very beginning of the stream, which was the generals are usually the last to get shot. So a lot of these stocks that the average American thinks that, if I just buy Apple, I have to make money. It's Apple. I mean, these are the biggest blue chip stocks going. Well, think back way before my time, before I was born. You know what else was another staple stock that everybody thought if I just buy this and hold it forever, I'll be fine? Tons of them. General Electric being one. Right, look where GE is today. And I think we live in such a world of disruption that no stock, no company is safe. You're always going to be having new companies, new competitors outdoing the other and disrupting other companies. So if you don't adapt, you're going to die. I mean, just look at, I always bring up this example of Circuit City, right? Circuit City used to be a big competitor of Best Buy. The only reason why Best Buy survived is because the CEO at the time, oh man, it's windy, invested a ton of money into e-commerce and built up the e-commerce business at Best Buy. Circuit City went bankrupt. Best Buy powers on. So I wouldn't be surprised if there's even a bigger powerhouse that comes out and dethrones Apple in my lifetime. If anything, if you look at history, it's actually probably quite certain that within my lifetime, there will be a company bigger and better than Apple. Any thoughts there? All right, really quick, team. This is the Moynihan Train Hall. I actually did a standalone dedicated video doing a tour of this train hall. It's one of my favorites here in New York City. I spend a lot of time here, mainly because this is where you get the Long Island Railroad, as well as the 1, 2, 3, and ACE trains. And I love all the amazing columns here. Hey, Hemi Power, good to see you. Dr. Longus. Nina says, Tom, I totally agree. Good to see you, Nina. Harry Connor says, New York City seems uncommonly empty. No, it's actually very, very common that, and I think I said this before, this is actually very common to see this. And what you're going to see is after New Year's Day, New York is a ghost town, relatively speaking, for probably the next 2 months. We're going to go into our classic deep freeze in January and February. All the tourists are leaving from the holidays, and then we pick back up going into the spring. So if you've been watching these live streams, chances are around the holidays, starting at Thanksgiving, you would see tons of people, so many people walking around with their families and their friends. After New Year's Day, snap your fingers, it's a ghost town. All right, one more view here, because actually you guys will be able to see into the post office. Zada says, love the columns. Thank you, Zada. Matthew M says, BlackBerry, Radio Shack, and Blockbuster are other examples. 100% right. Now, I think another good exercise to do is go back throughout history, spend some time on the weekends, go back throughout history, and view the components of the S&P 500 since its inception. And you'll find that 25 years ago, or 30 years ago, the makeup of the S&P 500 is completely different than the makeup of the S&P 500 today. And if I had to bet, this is a really nice view of the Times, this is the New York Times building right here. There's actually a software company called Datadog, ticker symbol DDOG, who has offices in there. Now, if I had to bet, I would say with almost complete certainty that in 20 years from now, there's going to be completely new companies that make up the top 10 stocks in the S&P. If I had to bet, I would say that. Yeah, Ryan Beck says 5G will be a commodity in a couple of years. Agreed. Beacon, New York is here. What's up? Good to see you, Beacon. The short guy, welcome. I see our good friend, the Mighty Bull. Wendy England says Apple is the one company that has done better than most after losing their visionary. That's also true. It's also really true. All right, one more shot at the main entrance here, and then let's head to the Hudson Yards. Penelope says it was the digital downfall for many companies. Who's to say that what will fall next? You're right. You are correct. Meld is here, Al Baker. Sears is another one. Sears is a good one. Kumar says next couple of years are going to decide which growth companies are going to make it to the next level. I agree, Kumar. Because we are now entering out of an environment of very, very cheap money. It's easy to make money and it's easy to build a company, relatively speaking, right? I don't want to just diminish these founders and entrepreneurs. This is all on a relative basis. Really quick, 8th Avenue, West 31st Street. We're right across the street from the beautiful Madison Square Garden, but we're now going to head westbound, and we are going to go right here to the Hudson Yards amongst all of these monstrosities of buildings. Marilyn from Murray Hill, thank you for being here as always. Hope you had a good first trading day of the year. But what Kumar said is very, very appropriate, because any company, right, and we're talking relatives, right, and not to diminish anybody's success, it's easier, I should say, to run a company when money is very, very cheap. And we've actually done entire live streams where we've talked about the presence of zombie companies. And a zombie company essentially is a company that the only reason why they're still able to operate a business is because they can in perpetuity acquire debt very, very cheaply to then grow the business and service their existing debt. Now that changes when money goes from free to Fed funds rate's going to go to 5%, right? You fundamentally change your risk-free rate. So a lot of analysts on Wall Street are trying to make this bet to say that the Federal Reserve is going to stop hiking interest rates probably by Q3 of 2023, and then all of these stocks are going to go right back up again. But what they don't, or at least in my view, what they are not taking into consideration, you know what, let's take a pit stop here. We always buffer, but I got to show you guys this. You guys are going to love this. What they're not taking into consideration is the Fed could stop raising at 5% and leave it there for 2 years. That's going to kill companies. All right, guys, we always buffer here, but I got to show you the ceiling. okay? Check this out. It is the entire New York City skyline upside down, built into the ceiling. Is that not cool, or is that not cool? Let's get a quick rating out of 10. I'm gonna give this a 10 out of 10. Not a lot of people know about this. This is fantastic. Joe Driver, 10 out of 10. Mike C, Wendy England, Matthew M. Hawaii says, I love it. Isn't it nice? They did an awesome job here. 10 out of 10 in the Moynihan Train Hall. This is the New York City skyline upside down. You guys can actually see the One World Trade Center Freedom Tower right here. All right, I just wanted to show you guys that. Apologize for the intermission, but I thought you might enjoy that, right? I think you guys enjoyed that. Hey, Ken Glass is here. What's up? Zach Drew, Truth Teller. Welcome. Nadia. Now, everybody has Rangers jerseys on. Is there a Rangers game in the Garden tonight? I'm just going to assume there is, because we have a ton of spectators coming out of the Garden in Rangers gear. I'm not a big hockey fan, but I hope they won. Hope they won. Hey, Dr. Longus is Tom. Fun fact, George Steinbrenner bought the Yankees from CBS for $10 million in 1973. Now it's worth over $6 billion. Whoa. That's crazy. Oh, Rangers win 5-3. Awesome. Oh, guys, speaking of sports, I think it's appropriate to say this. I'm not a football fan or anything, but everybody in the chat last night was talking about the Buffalo Bills, and obviously I can't really read the chat that well, so I didn't really understand what was going on. Man, I guess supposedly a player collapsed on the field, and they actually had to revive him. So they had to do CPR and the defibrillator to revive the player. How freaking scary is that, man? So I think the NFL canceled the game or closed down the game. And yeah, I mean, how freaking scary is that? You know, jeez. Definitely prayers to the player's family and him. Hopefully he has a speedy recovery. And you know, it just goes to show the risks that, especially, you know, I played soccer. It's not a contact sport, right? You know, it just really goes to show the risk that these football players are taking. You know, watching it on the TV is one thing. You know, it doesn't really look that brutal, but, you know, if you get hit really hard by another guy that weighs, you know, 250, I mean, it's wild, man. Anyway, I just thought I'd say that. I heard about it from the chat. I didn't hear about it in the chat, but everybody was saying Buffalo Bills. I went on Twitter, I Googled it, and it's, geez, that is the scariest freaking thing ever, man. Oh, Edward Adams says it was a cardiac arrest. Yeah, it's, man, just, I don't know, that stuff gives me the creeps, man. I hate watching that stuff. Well, hopefully, please God, he'll be all right, and his teammates and, you know, everybody watching will be all right. Brick Stonewall says, Tom, they had to revive him twice. The first time on the field and the second time at the hospital. That's disgusting, man. Yeah, Hawaii, he's only 24. He's younger than me. That's, well, I mean, thank God that they were able to, you know, save his life, quite literally. You know, I'm sure the NFL has all the best doctors and trainers in the entire world, so thank you, God, for that. I know, Al Baker, like, gives you anxiety to be like, geez, like, makes you want to watch yourself. Well, I just want to mention that. Hopefully, you know, hopefully he'll be fine. He'll make a very speedy recovery, and hopefully, please God, nothing like that ever happens again. All right, back on track here. This is the south side. Well, actually, it's not the south side. We were just on the south side. This is the west side of the Moynihan Train Hall, transitioning right into the brand new Hudson Yards development. We're going to try to walk through here, but usually the internet is no good. But check out these brand new apartment buildings. I mean, not apartment buildings, office towers, I should say. But if you guys have been enjoying the live stream so far tonight, feel free to click the like button on this video and hit the subscribe button if you're new. We go live at 8:30 p.m. Eastern time, and we would love to have you guys join us for these live streams where we walk the city and discuss the financial markets. Now, in this building is a major consulting firm, EY. We talk about EY quite often. Actually, Techno Pink, I'm not sure if he's in the chat. He's a consultant at EY, but in the Dominican Republic. You also have the National Hockey League has their main office in here. The address is 1 Manhattan West. And you have Accenture, which is also a major consulting company. This is my favorite shot, I think, ever. Maybe not ever, but it's pretty good. You have the Empire State Building. You have One Penn Plaza. You have a little teeny section of Madison Square Garden. And you have the Moynihan Train Hall. Fantastic. Wow, Tom G says I had a heart attack in 2 strokes. Modern medicine is a miracle. Take care of yourself, Tom G. We want you to be around, my friend. Please take care, please. Sally is here, welcome. You know, I think we should go inside the shops, the Hudson Yards, one last time before they take down all the lights. I think you guys will enjoy it quite a bit. So we've covered a lot so far. If we just do a quick recap, yes, first trading day of the year, S&P down 15 points, Dow down 11 points, NASDAQ down 80 points. Fine, no big deal. Let's direct and shift our attention to the bond market. Interesting action in the bond market today. And the reason why I say that is because looking at the Dixie, and the Dixie is the dollar index, which tracks the relative strength of the dollar against a basket of foreign currencies. Dollar had a good day. Dixie was strong today. I think 114 are we on the Dixie. 10-year U.S. Treasury yield actually came down. I think it's make or break now for that 10-year U.S. Treasury. Again, throw a 50-day moving average on that. It's getting rejected and turning lower at the 50. So 10-year U.S. Treasury closed at 7. Oh my God. Talk about Armageddon. Oh man. 10-year U.S. Treasury yield closed at 3.75%. I think it's going to be a big inflection point here. I think if we go to 4, markets are going to fall under pressure severely. But if we get turned away and go lower, and we have that dollar come down instead of go up, well, then maybe we'll potentially be spared here. So interesting action there. Obviously, we talked about Apple was the last general to be shot. Apple was down 4% today to $125. Now, Apple's trading below its 200-day and its 50-day moving average, but this is my targets for Apple. You guys want to know this is my target, or at least what I'm watching for Apple. If you look at a 200-week moving average on Apple, that comes into play at 114. There's also a major gap in between $96 and $100 on Apple. I think that is very, very possible we get a major gap fill there. And if that happens, I think the S&P 500 is going to make another leg lower, which would be the 4th leg lower. Here we have the entrance to the shops. at Hudson Yards. The exact address is 30 Hudson Yards. Let's head inside. Hey, Jay Trader, what's up? Good to see you, Jay. Thanks for joining us. Jay says, I'm glad I sold my Apple stock a few weeks ago. Jay, any thoughts for this coming year, 2023? We think the equity indices are going to have a positive year, negative. I'm going to give you guys a detailed tour of this building because unfortunately, or fortunately, depending on who you ask, they're going to take down a lot of these holiday lights, Christmas lights. Jenny Trickett says, Tom, what is this building? This is the Shops at Hudson Yards. So this is the brand new Hudson Yards development. It includes multiple things such as classic retail stores, art galleries, which I'll show you guys here in a moment. Let me try to shift gears over here. Wines and spirits. So a big mall, really beautiful. Now, some of the real estate here is fantastic as well. You're right, Sparks Carnival. Yes, so Apple is currently trading at 125. The 200-week comes in at 114. You're correct. So that would be the area that I'm watching. And then if things get really bad, you got a big gap there between 96 and 100. Now, we talked about how Elon Musk is now dethroned as the richest man on earth. It is now the CEO of LVMH, a luxury brand. Unrelated, but I guess related in the same sector or industry. We have Tiffany & Co. here. This is one of the off-site retail locations, but they're actually doing a complete gut renovation to the one on 5th Avenue, which is really, really breathtaking over there. Hey, Pup, what's up? Bagels and Walks, good to see you. Hey, Hermes addict. This is Love Tiffany's. All right, one more shot from this angle, and let's check out the vessel. Hey, the Dark Horse, welcome back. DWG, good to see you. Okay, let's check out the vessel. I think you guys are gonna love this. Hey, Sparks Carnival, thank you for joining, and we will see you tomorrow. Okay, let me know if we're buffering in the chat. I think we should be good. I think we should be good now. Now, this building right here is called the Shed. It actually has the ability to move. August Ice, thanks for joining us. Free time, please don't post things like that in the chat, please. Just respectfully for... I thought I blocked that keyword. Now we're looking at the one and only Equinox Hotel. Some individual hotel rooms go for upwards of $1,200 here. And it looks like they've already started to turn down the lights. Usually they have all of these trees lit up exactly like they have lit up over here. Toby Sanchez, I know, says, hello, Tom. The lights look so beautiful over there tonight before they go down. I really wish that maybe they could keep them up a little bit longer, but then again, they have been up quite a while already. Vidal says, what time does the mall close? I'm not too sure. If I had to guess, maybe 10 o'clock. Probably closes right around 10. Now, if you look directly over here, you'll actually be able to see all the way to New Jersey, as well as the West Side yards for the Long Island Railroad. Ryan Beck, no, it's actually everything here you see, a lot of these brand new apartment buildings, these are extremely, extremely expensive. I think this is probably one of the most expensive zip codes now in New York, for sure. Wow, check that out. You got the almost full moon amongst the beautiful Hudson Yards Tower here. And here's one more shot of the vessel. Hey Sandra, what's up? Good to see you, Sandra. Western Mass Dave. Myra King says, is it just me or I can't hear Tom? Maybe our audio went out. I'll have to check up on that. Hey, 45 says, Tom, I read that Shopify wants their employees to stop doing so many staff meetings. They could spell problems for teams' demand. I mean, I think the vast majority of meetings is, I don't think a lot of them are productive, to be honest. Abby once, as you hear me? Maybe you just need to refresh your web browser, maybe? We were going through some buffering. Okay, let's walk inward. Actually, I'll try to take you guys down the stairs so you could see the entrance to the hotel. You could actually see all the Long Island Railroad cars here. Teresa Diaz, thank you for joining us. Thank you for having your time check. Across the way, you have the Jacob Javits Center. Now, here's something that I've been noticing today, and a pattern over the course of the last couple months. Now, we know it's very important to watch for relative strength. So what type of stocks or what particular stocks and sectors in the market are performing better relative to other sectors? Now, it's interesting because let's first preface this with the following. We are going into an environment, or we are in an environment, where we're coming off the back of 4 consecutive 75 basis point rate hikes with an additional 50 basis point rate hike we got at the last FOMC meeting, in which case we are going to be getting the Fed minutes out tomorrow from that meeting. So interest rates are going up. There's all of this talk and pandemonium on Wall Street that the housing market's going to crash, it's going to be Armageddon again. But everybody, what the heck is going on? Seriously, look at all of the home builder stocks. Okay, I'm going to give you a couple ticker symbols and let's talk about this because it's important. Look at Toll Brothers, ticker symbol TOL. Look at Taylor Morrison Home, ticker symbol TMHC. Look at ticker symbol DHI. And also, if you want to track the broader based indice, the home builder ETF, you could type in ticker symbol ITB. Now, all of these particular stocks, the home builders, are actually forming what appears to be a stage 1 base. They have all 92 relative strength lines, many of which are still trading near 52-week highs. The daily performance today actually wasn't bad. So it's either there's a disconnect where somebody's wrong, right? It's either investors are wrong and these home builder stocks are going to collapse and they're caught on the wrong side of the trade, or somebody very, very smart on Wall Street thinks that this housing crisis or slowdown isn't going to be as bad as everybody thinks. So do we have any, I want to know from you guys, right? Because I don't know. I tend to be a trend follower, but as I watch these individual sectors, hold on, let me give you guys a shot of the main entrance to the Equinox Hotel. This place is crazy. If you ever come here, you got to stay here. It's expensive though. Any thoughts about what could be causing this? Why are home builder stocks still performing relatively well now that interest rates are going up? What do you think? Hemi Power says home building is huge in Florida. Abdullah, what's up? Hey, Dominic Romano, what's up? Good to see you, Dominic. Dominic, any thoughts on your side from that? Why are home builder stocks actually performing well and holding up? Because if you look at the earnings block, right, I want everybody to go and look at all of the analyst estimates for many of these home builder stocks for next year. I mean, all of them have taken about a 20% haircut as it relates to earnings estimates. So why are these holding up? Interesting. Hey, Grand Street 1, what's up? The age of reduced quality of life and lowered expectations. All right. Nicole says, yeah, Toll Brothers is building a lot in Florida. Everybody keeps moving. Yeah, so, I mean, somebody's wrong, right? It's either somebody's wrong. Dominic Romano says there is a mass market of people ready to buy under 500,000. You are correct. We do have a shortage of affordable homes, and that is why, I think, and again, in my opinion, if you're just going to get your feet wet in real estate investing, if you're just going to buy your first home, never buy the nicest house in the market. You always want to buy just above the lowest cost house and just the middle of the pack, right? Because you'll always have a renter base. There's never going to be a shortage of people who are looking for a normal, just basic place to live. I think where you're going to see ends of the extremes are at the multi-million, 20, 50, $60 million properties. I think those may take it on the chin. Clay G says, I can't believe that I just hop on here and you were discussing my favorite stock. What is that, Clay? Please tell me. Cool Weather Farmer, good to see you. This is great advice. Jacqueline Smith says, Tom, do you watch HDTV? No, but my mom loves that stuff. I love real estate. I love real estate. I mean, I show it off every night on the stream, but I don't watch HGTV. Dominic Romano says, yeah, they'll make money there. Yeah, Michael Joseph, keeping it simple, says, Tom, Economics 101, supply and demand determines price and value. You're right. You're right. Austin City Limits says, Tom, a lot of people are moving to Albuquerque, New Mexico. Brendan O'Brien says, Tom, new home prices holding up much better than resales. Also, the high end isn't really decreasing short term. Jewel Mars says, home builder stocks are responding to demand for new homes. Well, if we look at a lot of the indicators, though, we would see a lot of the demand is falling off a cliff, though. Right, and that's why I think I'm a little bit, I wouldn't say confused, but there's somebody's missing something. There's a missing piece to the puzzle, because the housing market in general is significantly slowing down. As it relates to existing home sales, I think this is the 10th month in a row that existing home sales are down, and so are new home sales. Now, I never take you guys down here, but does anybody remember we got so lucky one night in the live stream? We actually ran into the lead architect who developed the entire Hudson Yards. We actually did an impromptu interview with him. It was awesome. I believe he was with his wife and they were looking at their amazing work. I mean, the lobby in here is just to die for. It's absolutely beautiful. But right across the street, everybody, this is the brand new 7-train terminal, 34th Street, Hudson Yards. Now, they expanded this recently to come all the way over here, which is fantastic. So the opposite end of the 7 train goes to Flushing Main Street, which is the largest Chinatown in New York City, bigger than the one in Manhattan. Toby Sanchez says, Tom, a whole lot of people are moving to Arizona and California. Good to see you, Toby Sanchez. The Dark Horse says, Tom, cash buyers are not slowing. Dominic Romano says, what is difficult to quantify is the lowering of quantitative easing to the housing market. True. This is just such a futuristic place. I mean, is it not? 50 Hudson Yards. I'm going to pan the entire thing and look at how futuristic this place looks. So Grand Street 1 makes a very good point, which I think is appropriate to call out. So Grand Street 1 says, Tom, much of Toll Brothers' new homes are high-end and for older buyers with more cash. That is true. But if you look at a lot of the other home builders that necessarily don't cater towards the higher clientele, they're actually performing better, which is strange. Now, the next time earnings season comes around, we are gonna freaking hammer on these home building stocks. I'm gonna be on every single call. And we're going to do some deep dives into this because I think it's either going to be, I think a trade of the century is setting up here, because it's very confusing why this is, why they have such strong relative strength. Now, the market could be telling everybody that, because, I mean, let's face it, am I the only one who's seeing this? I mean, let me know in the chat. Every time I go on Twitter, or FinTwit or anything, or even talk to my friends, everybody, I'm saying everybody, is saying the housing market's gonna crash, they're gonna go down 50, 60, 70%, it's gonna be Armageddon, people are gonna lose their homes. And they have good reason to say that, actually, right? I'm not necessarily disagreeing. I mean, actually, I would disagree with that, like the massive Armageddon. But the market is just not showing it yet. Usually the market is actually a leading indicator. We could actually use the stocks as a leading indicator for the housing market. So if these home builder stocks were getting pummeled, that would be the market showing a leading indicator for the deterioration of housing in America. Now, it's either something's off, somebody's wrong, I don't know who it's gonna be. Hey Yogi, what's up, dude? Good to see you as always. The dark horse is the juxtaposition of lumber crash doesn't add up with home builder stocks. Kumar says, I don't think we are going to have a 2008-like crash. Many are buying on cash unless people are locked in at variable rates. Yeah, I mean, Kumar, that's my thoughts exactly, and you make a good point. You make a very, very good point. However, if you talk about, I think you're correct for residential, single family homes. Very seldom, after 08, the percentage of people buying single family homes on adjustable rates has gone down significantly. Where I do see some concern, okay, if we want to sort of switch gears here, speaking of a stock that's down 100%, here's Peloton. If we want to sort of shift gears here and talk about where there may be some trouble, is a lot of these deals that were just done in multifamily, I'm talking big deals, where a lot of those deals are done on floating rates. Because here's my concern, and again, anything I say, it doesn't mean it's gonna happen, this is just sort of what I'm thinking. A lot of these big multifamily deals were done with floating rates, adjustable rates, and a lot of these investors were getting very greedy and saying, look, the property cash flows, it's a great property, it's Class A. We can just continuously raise the rents to cover the cost of the debt. Now, they may be right, but what have we also been noticing? We've been covering this here on Walks on Wall Street as well. Rents are actually coming down. So I don't know if they're going to be able to demand or command such egregiously high rents, especially if we slip into a recession, which if you looked at, the price of crude oil today, down 4%, that is maybe an indicator that we're going to slip into a recession. Oh, check out the pug dog. I love those kind of dogs. Here's the main entrance to the tunnel. VS's lumber dropped, but retail consumers don't see the savings at Home Depot. Yeah. Now, for some perspective, this is what the the west side of Manhattan used to look like. All of this type of buildings. It used to just be all of this. These very old, very basic looking buildings. And then we've turned it into these massive monstrosities. This is actually the Edge. So if you guys want to come to New York City for an interesting tourist attraction, if you go up to the Edge, I think you'll be quite impressed. Here's another dog here at the Hudson Yards. Yeah, cool weather farmers is maybe a bit outdated. Abdullah is here. What's up? So anyway, we'll keep that on our radar. So ticker symbol DHI, Toll Brothers, and Taylor Morrison Homes. These stocks all have 92% relative strength, and they were all up reasonably today, and they're also trading above their major moving averages, 50-day and 200-day moving averages. This has been a sector that's actually leading the market. Now, if you want to sort of gauge this better, and we're actually going to talk about semiconductors here in a minute, because I think that's also important as potentially a leading economic indicator. But first, check out One Manhattan West. I love the new style lobbies where the elevator ducts are so far in. I guess one could say it's wasted space, but it just really looks very expansive here. Hey, Miss Brown Eyes, thank you so much for your very kind $20 donation. Thank you so much. Thanks for being you. Thank you. I appreciate that. I appreciate all of your support. Your support helps keep these streams going. Oh, guys, look at this. I think that's a crack. Is that? It is a crack. Now, I think we may have, I forget who it was, but somebody owns a glass company that walks Wall Street. How much would you guys guess one pane of glass here costs? I'd assume it's very, very expensive. Are we talking thousands of dollars, you think? Oh, let me get another shot at it. Do you think it's safe to say that this maybe one pane of glass costs $5,000? Maybe. $10,000. Oh my gosh. Jeez. Wow, it is really windy. Let's try out the microphone. All right, give us 1 minute. Hit the like button if you guys are enjoying the live stream, and subscribe if you're new. We're about to embark on an interesting journey here with the new mic. Oh, could you believe that? I didn't bring it. Oh my God. How ridiculous is that? I left it at my office. Can we please get an L or RIP or RECT in the chat for that? That's just unacceptable. That's ridiculous. All right, we'll try out the mic another night. I'd appreciate if everyone puts an L in the chat for that. That is a big mess up. I cannot believe that. I bought it today. All right, whatever. Moving on. Hey, I actually got it here. Interesting segue. Now, this is actually my first time that I've ever been in B&H. I gotta say, this place is unreal inside. I went in here today. The place is such a well-operated machine. I was extremely, extremely impressed. Now, I'll sort of tell you what I'm talking about. I went in there to get the mic. There was like 3 or 4 people immediately on me when I walked in there to help me out. I was in and out of there in 5 minutes. And they make sure the products are at the cash register for you. Like how cool is that? So you go in there, you tell the guy what you want, he prints you off a receipt, he gives you the receipt, and he says, okay, go stand in line at the front of the counter, and the product is there for you at the cashier. Now, I think that is such a great operation, and maybe that even cuts down on theft, because it's impossible to steal anything, because you just have to tell the sales guy what you want, they print you out the ticket, and by the time you get online, the lady is standing there and checking you out. It's like the coolest operation ever. And by the way, the products come to you on these conveyor belts that go all the way across the store. It's an amazing operation. I'm actually gonna have to shop here more often. I've never been. And it's like a New York staple icon, and I've never been in there. Yeah. Oh, the LT products you've ordered on their website before? So have you ordered online and picked it up in store? How was that experience? Oh, Carl is answering our question. Says, Tom, tempered glass can cost $35 per square foot. Thank you for that. Richard Vogel, what's up? The Celtex has bought some stuff from B&H. It's a nice place, very nice. I have not heard of that, Nicholas Dura, the Empire Outlets. Walking Minnesota says, Tom, I ordered some photography gear through them, delivered to the West Coast. B&H is great. Hey, that's good news. Yeah, I've never been in there, so it was good. I was in and out of there 5 minutes, very fast and efficient. Photos from around New York says B&H has done well by transitioning to online/digital sales to online advertising. Well, it seems like it because, you know what, photos, and this is actually pretty good to talk about because at the beginning of Walks on Wall Street, we were talking about disruption, right? We were talking about how it's probably going to be a surefire bet that in 10 to 20 years, the top 10 stocks in the S&P 500 are going to be completely different just because of the rate of disruption that this world, especially the United States, is partaking under. And I always walk past B&H and I'm like, how are they not out of business? Like, who in their right mind would shop at B&H if I could just go order things off online through Amazon and Best Buy? And the moment when I walked in the store and bought this little microphone for $20, I'm like, I could see why they're still in business. They completely streamlined the operation. It's not a laborious time to go in there. You know, I was actually dreading shopping there because I'm like, I'm gonna have to wait online. It's just, people are gonna be nasty. It's just like, I wanna order it offline. Completely different experience. And you could tell they're a very tech-first, tech-focused place. Yeah, Nexus TV NYC says more stores should follow this method too. It will eliminate theft. You are 100% right. I mean, I think B&H should open a third-party consulting business and consult with other retailers about how they streamline their operation. I think they'd make a killing. And it's important because everybody, who's reporting earnings this week? We talked about this on the Stock Market Look Ahead stream. Walgreens is reporting earnings this week. And it's so critical. These guys just made the bus. Love that. 2 thumbs up for those two. It's so critical because last earnings season, I was on the Rite Aid conference call, and the CEO comes on the call and calls out New York City specifically and says, we are forced to close stores in Manhattan because of egregious and aggressive shoplifting. I bet you they have almost no slippage at B&H. I would actually be really interested to see their numbers. It's a good point. Hey, Brandy is here. What's up? Tariq Khan, my friend. What's up, Tariq? This is Tom. B&H customer service is like Chick-fil-A. Very nice people in there. And they help me get exactly what I need under 5 minutes. I want to point this out to the team here. This is the brand new and renovated One Penn Plaza. Now take a look inside. Look at how open and airy and brand new it is. Now I could tell you with certainty this did not used to look like this. I actually had an interview here way back in the day. Okay, I think we are not buffering anymore. Yeah, DM says it looks really nice. They did a good job with the renovations. They did fantastic here. Fantastic. You know, I think it may have been, I think it was Ryan Beck sent me an email here, but I was actually watching the premiere. The top of Central Park Tower, the triplex that we always talk about, Ryan Serhant of Serhant, the real estate broker, put out an amazing video outlining and giving details about the triplex atop of Central Park Tower. If you guys haven't seen that, you guys got to go check that out immediately. Really, really well done. Hey, Marty says B&H has a credit card that eliminates sales tax on your purchases. Do they really? I never do that. How do they do that? Yeah, Ryan Bex is glad you saw that. I was watching the premiere. I had it saved on my YouTube. It's awesome, man. I mean, I couldn't even imagine living like that. Could you? I could not imagine coming home to a triplex atop of Central Park Tower. Now, here's the crazy thing is that, will that apartment get sold? Yes, it will. But here's the even crazier thing. It will probably sit completely empty for, I would say, 360 days out of the year. So somebody will buy it, but they'll probably never go there. Now, a lot of people don't realize this, but much of the billionaires drove big apartment buildings, like 432 Park Avenue, Central Park Tower, 157. Yeah, the residents do live there, but the biggest units, the ones that are 100 million, 150 million, very seldom do the owners actually go there. Some of these units sit vacant forever. I think the most expensive unit of 432 Park Avenue, I think the owner has never been there. They call them piggy banks in the sky, which makes perfect sense because, let's say if you're worth, 20, 30 billion dollars, you're overseas and the government is a little bit tyrannical. Why wouldn't you just buy $100 million piece of property in New York? You never have to worry about it. It's going to be protected. It's not going to get damaged. You have 24/7, 365 staff and security there. It's a great place to park the money. So here we see they're taking down the holiday decorations, Christmas decorations here at Macy's. It was an awesome year, and I think they did a really good job with the decorations. So until next year, everybody, these will be back up. Hey, Carl says, I watched an interesting video on the original Millionaires Row that formed once they opened Central Park. Very cool. Hey, Broken is here. Welcome. Good to see you, Broken. I think we may actually have to cross the street because they have this blocked off. Yeah, Nina says the red ribbons look awesome. They really do. Ruby Falcone, good to see you. Thanks for joining tonight. Now, I think the last thing we need to mention on the stream, because we covered a lot. I think we have gone back into the swing of things here. Tomorrow is going to be a very critical day on Wall Street. Specifically because we are going to be getting one of the most important leading indicators there is for forecasting GDP growth and economic growth. And that is the Institute for Supply Management PMI numbers. I believe they are released tomorrow at 10 a.m. So on tomorrow's live stream, we'll be doing a deep dive into the PMIs. If we think about the November PMI number, we actually came in at 49. The first time in many, many, many months, the PMI came in under 50, which signals contraction in the manufacturing sector of the economy. But as we know, if you've been watching Walks on Wall Street, the PMIs have been decelerating for months, giving us ample amounts of time to adjust accordingly and shift our portfolios around. Let's see if they took down the windows at Macy's. Maybe they'll have these up for a few more days. No, they're taking them down. I think this was probably the last day that they had them up. You can see them a little bit, but these will now be gone. See them next year. Line sinks is what happens to the Christmas decorations. No, they put them away. They store them. They do not throw them out. I could assure you of that. Here we have one Vanderbilt again. Now this is when New York City goes into its deep freeze. 35th Street and Broadway on the intersection here. I'll give you guys a shot of the Empire State Building. Oh, and for everybody who is unaware, so we are going to be starting up Walks on Wall Street Coffee Hour. Now, I'm deciding on between two times to do it. I think I may change it up each day. I put a poll out there, and it seems like the majority of people are able to watch and just sort of hang out, have a little bit of a lunch break at 1 p.m. Eastern Time or 4 p.m. Eastern Time. So if you see any notifications, no pressure to jump in, but if you want to sort of take a load off during the workday, join the chat and hang out. We will be having a standalone video posted to the page with the live chat up, so we could check in, see how everybody's doing, talk about the markets, and watch an interesting video. So I think I'll probably be posting those either 1 p.m. or 4 p.m. New York time. So feel free to join us for Walks on Wall Street Coffee Hour. We're walking up Broadway, which will head us directly into Times Square. Ryan Beck, so we started the last 2 days. So today we did it at 4 p.m. Just something to throw up there just to have the chat going. Maybe we could just check in on the market. But we should have another one out tomorrow at 1 p.m. because we do have a pretty diverse audience here. We have a lot of people from New York, a lot of people from California, so the time differences could change. So I think 1 o'clock maybe is better. Maybe for the Cali people who are having their morning coffee or whatnot. Yeah, Billy, you're right. This is 4 p.m. may be better for people out west. That's so true. I know, Ryan Beck says I was knocking dust off my computer all day. Yeah, it's the first day back when everybody was back, right? Today felt really good. I felt really productive today. It seems like everybody, including all the bigwigs, the C-levels, are back in the office, right? A lot of the decision makers are back in the office. Everybody's back. And I'm ready to get back to work. So hopefully everybody had a good first day back, first business day of the year, first trading day of the year, if you will. Hey, Bree Grams, what's up? Good to see you, Bree. Andy is here from South Korea. Good to see you, Andy. Michael Joseph says, are the titles different for live streams versus standalone videos? It's hard to tell sometimes what's on YouTube. Yeah, so I think, and I can actually give YouTube a compliment here, because if you click on the Walks in Wall Street channel, you'll actually see things broken down really nicely. So you'll see your homepage, you'll see videos, and then you'll see lives. So they break it down. So anytime you click the live section, that will only include live streams, and every time you click the video section, that will only include standalone videos. And that's one of the main reasons why I never uploaded standalone videos before, is because they kept getting mixed and matched with the streams. So I don't know, I think that YouTube's new user interface to the new UI is actually pretty good. Does anybody else see that on their YouTube app, or is that just me? I saw that change about 2 or 3 months ago, and I think the user interface is actually a lot better. And I think YouTube is doing that, or Alphabet, I should say, to compete with the likes of ByteDance or TikTok. All right, we're gonna make a right on 42nd Street, head over to Bryant Park. Now in this building, 1411 Broadway, there's actually a company called Third Bridge, which I think they compete with companies such as GuidePoint, if anybody's heard of that. Now these are sort of consulting firms that connect, I would say, industry experts, so to speak, to different mutual funds. To different mutual funds, hedge funds, or it doesn't even necessarily need to be that, but just anybody who wants to consult. And you can actually join the GuidePoint network or the Third Bridge network, and you can be paid to consult with different firms and funds. And I'm actually a part of the GuidePoint network. They reached out to me on LinkedIn. Now, supposedly, anytime you reach enterprise level or director level at a company, you'll probably get reached out to by these firms like GuidePoint. And many people don't sort of ignore them and blow them off. But you'd be surprised. You can sort of make I wouldn't say significant, but you can make some pretty, decent pocket change by consulting with these companies. And above all of that, you learn a lot and you can grow your network. I've consulted with some hedge fund managers that were looking to get a better perspective on what's the best SD-WAN vendors and all this different stuff. And it's really cool to meet all new types of people. So if any of you, work in any industry that you think you have an expertise in, maybe go through your LinkedIn inbox, and you never know, maybe you'll have like a message there all the way at the bottom from an account executive or something at GuidePoint. Who knows? Bank of China, right here. You could actually see a little bit of the Empire State Building. But our goal is to cross all the way over to the Stephen Schwarzman Building, the New York Public Library. Yeah, the LT Prods. Do you know much about a company called Splunk? Yeah. I think their ticker symbol is SPLK. I'm very, very familiar with Splunk. Very, very familiar. Let's see if they close down the Winter Village for the year. We'll see. Christine, this is Tom. When are you going to the Gotham Bar in the Peninsula Hotel? We were there. I think we were in the Peninsula Hotel over the holidays. You may have missed the stream, but it was awesome in there. Team, they have closed the Bryant Park Winter Village, I guess until next year. As you can see, they've taken down all the decorations. I think they're going to leave the ice skating rink up, though, until maybe March. I thought I read that somewhere. My friend Young Nation 92 says, Tom, what do the locals do for fun out there? I'm sure y'all don't care for touristy things. I mean, dude, New York City, I mean, there's not a shortage of things to do here. I mean, this place it's fantastic, man. Fun is everywhere. Now, I will say, I think a lot of people, generally speaking, who come to New York tend to have a similar type of frame of mind. They tend to be very, very smart people, at least in my experience from people I've met here. Extremely smart and extremely dedicated at achieving something, right? If you're not born and raised in New York State and you come here from somewhere else, chances are you have something that you're after. And depending on who you are, and if you want to grind and you want to accomplish something, usually you're preoccupied with work, so you don't have a lot of time to go out partying, hanging out at the bars and all the clubs. And I think that's the biggest temptation in New York, because you could do that every day, right? You could do that every day, go out and spend tons of money at the bars, restaurants, and clubs in New York. This is the Bryant Park Grill. But I think the people who come here and hunker down and avoid all of the distractions and put their head down and work. They don't hang out with friends, they don't go out partying, they don't go out drinking. They just go to work and they freaking just have like this burning fire to accomplish what they want to do. It's a big sacrifice, but if you can avoid all those demons, I mean, you're going to be, I mean, you're going to have so much success here. It's going to be bleeding out of your eyeballs. It's just going to be nuts. But you have to be disciplined. There's so many things to do here that's fun, but if you can avoid that instant gratification, I mean, you're going to kill it no matter what you do. I got to point out this New York Public Library, 5th floor. If you're interested in finance or anything like that, take the elevator here to the 5th floor. You're going to find Bloomberg terminals that are absolutely free. Totally free. And this is another example that in today's day and age, everything is pretty much readily available for you at your fingertips for free, right? Generally speaking. You know, we have the internet, which has totally driven the cost of education to zero. And you have great government sponsored resources. And I actually think this one was a philanthropic, however you say that word, donation, that you can come in here and use $2,500 Bloomberg terminals every day. There's no time limits. So the information's available out there for free. You just need to put in your time. So I would check that out if anybody's visiting New York, or maybe you are, you know, in college here in New York City, you're interested in finance, financial markets. Spend your time there. Don't go to the bars. Don't hang out. Spend your time here on the Bloomberg terminals, building your discounted cash flow models, right? Do that. But now we are outside of the beautiful Steven Schwarzman building. Now, there are rumors on Wall Street that Steven Schwarzman may be retiring this year. I'm not too sure how true those rumors are. But I think if he does retire, he is going to go down in history as one of the greatest investors of all time. Steven Schwarzman. Hey, Seatstruck says, hey Tom, what camera are you using? We are recording live on an iPhone 13 mini. Thank you for watching us tonight. Hey, Tariq Khan, what's up? Oh, 6 months in advance you booked tickets for the Statue of Liberty. Nice. I haven't been there since I was so young. And the horrible thing is, you know, after 9/11, I think they actually closed down visits to the Statue of Liberty. But now they have, I guess, apparently reopened that, which is nice. Nina says, bingo, Tom, majority seek instant gratification entertainment. Yeah, I think just basic work ethic is, you're gonna really, really stand out. I'll give you another shot at the Lions because these Christmas wreaths are probably gonna come off probably by tomorrow. Yeah, Michael Joseph, I know. It's like you're streaming on a mini, that's why the text is so small. Now, it's not raining, but it looks like it just stopped. I think this is my favorite, I guess for lack of a better word, vibe in the city, is when the ground is wet, all the lights of the city are reflecting off of the pavement. I think it gives it just an iconic look that is unmatched anywhere else. Stephen Bates is here, welcome. Michael Joseph was Tom used to be able to climb all the way into Lady Liberty's torch in the 80s. Wow. I think I did that though. I think I did that when I was really little. I think I was like 5. I barely remember it, but then, you know, unfortunately, you know, after September 11, 2001, a lot of the main tourist attractions were closed down for obvious reasons. I think one of which being, you guys know, the New York Stock Exchange. There was a time where you were able to actually go to the floor of the New York Stock Exchange and walk around, if you could believe that. Obviously predating or previous to 9/11. Pup says, Tom, do you remember 9/11? You were 5, 6. I remember it vaguely, but honestly, I was just too really young to conceptualize, you know? I mean, I obviously knew sort of what was going on, but I guess maybe at the time, not the gravity of the situation, perhaps. I was really, really young then. I mean, I don't really remember anything about my life when I was, 4 or 5 years old. Hey, Shannon Hall, what's up? Good to see you, Shannon. Thanks for joining us. Outside of Madison Avenue on the corner of East 42nd Street. One Vanderbilt looks awesome today. Shannon Hall says, thanks again, Tom, for the stream. No problem. I think we covered a lot. Had a lot of good conversation. Surprised there's this much traffic at this hour. Wow, Michael Joseph says I was in high school on 9/11. Worst day I remember. I could imagine, dude. Could imagine. All right, let's wait for all these guys to hopefully stop so we can cross. Hey, Lou T. Williams is excellent, Tom. Good to see Lou T. Williams. I'm trying to show everybody all of the major Christmas stuff before they take it down. I have a feeling the Christmas wreath that is crowned on the Grand Central Terminal will probably be down this week. Yeah, Dusty Cole, what's up, my friend? I did hear that. Now, Dusty Cole, I also have a piggyback to your comment. Did anybody see the recent interview? The recent Stanley Druckenmiller interview. This is an awesome shot with the American flag and the Chrysler Building. Now, Stanley Druckenmiller was quoted in a recent interview. I probably should have posted the link for you guys, but I forgot. I'll leave it in the Discord if you want to join us there, or I'll put it in the newsletter. He says that a recession is almost guaranteed, and he sees a 99.9% chance or a probability of a hard landing. Did anybody else see that interview? I hear bagpipes. Is that just me? I'm trying to pinpoint of where they're coming from. I think they're over here somewhere. Reminds me of St. Patrick's Day. BLNTSMK. Good to see you. This is Agree. Now here we are at Pershing Square. So a little bit of a cool fun fact. I think yesterday on the stream, who was ever joining us for Walks on Wall Street's stock markets outlook stream, there's about a 90% chance we walked past billionaire investor Bill Ackman. So that's cool. Big fan of Bill Ackman. I've learned a ton from him. And we were walking right near his place, I think. He still has a unit in 157, which is actually the first Billionaires Row building that kicked off this entire trend. So the developer is the XLE group, and they are responsible for the gorgeous 157 Billionaires Row apartment building, and they are also responsible for the development of Central Park Tower, which we were talking about a little bit earlier on in the stream. So if you guys want to see an amazing, here's the bagpipes. If you guys want to see an amazing tour of the triplex atop of Central Park Tower, just check out Ryan Serhant's channel, Serhant, his broker dealer, and you will see. It's an amazing, amazing place. Hey, Horatio Snipes, what's up? This is the timestamp. I don't have the timestamp. I think it was near the end of the stream. Near the end of the stream. All right, we're going to do one lap around Grand Central, and then I'm going to take you guys back to the office. We are now officially in Walks on Wall Street after hours territory. So thank you guys for good conversation. Now we'll do a quick lap around Grand Central because they're probably going to take down all the Christmas stuff. So if you guys are enjoying the live stream so far, feel free to click the subscribe button so you get notified when we go live next, which will be tomorrow at 8:30. And leave a like on the stream. But I'll take you guys on a quick walking tour of Grand Central and show you the very famous black little sort of uncleaned space. So for those of you who don't know, that's what the ceiling of Grand Central Station used to look like, that little black rectangle there. And they left it there intentionally to show everybody the look of the ceiling way back in the day when you were actually allowed to smoke cigarettes and cigars in the building. You can imagine all of that tobacco smoke and soot rising up to the ceiling. So when they restored the place, they left that little sort of rectangle there so people could remember the air quality, be it egregious and all. Hey, Joseph Hardaway, what's up? So I'm joining late tonight. Yeah, I mean, just as a quick recap, Joseph, we were just, the main things we were talking about tonight is I think that divergence is closing in oil and gas. We were talking about crude oil, how XLE had a bad day today. I think the XLE is going to fall further. Occidental Petroleum was down big, now down below its 250-day. ExxonMobil was down, Chevron was down, and all three of those stocks make up a big weighting in the XLE. Then we talked about the relative strength of the home builders. Home builders have, 97 or 99 RS scores, trading near 52-week highs, while everybody's predicting Armageddon for the housing market. Toll Brothers, D.R. Horton, showing exceptional relative strength, which is quite interesting. And then Apple down 4% today. I think we nailed that trade on the stream. We've been calling for big sell-off there. Beacon, New York says, now that you mentioned it, the tobacco smell hasn't completely disappeared. I actually don't smell it too much, but maybe it's just I'm so used to it. Friendship Lights with a great question. It says, hey Tom, walks from Wall Street. What is the industry that you think is really going to surprise us in 2023? Whew. Good question. Home builders. I think so far that is the one. There's a big consensus out there, and also maybe let's zoom out a little bit more global macro. What we talked about today, China. I think a lot of the Chinese stocks may outperform. Look at the Hang Seng Index now. Does anybody know where it's trading? I think we've been open for a while now. And Photos from Around New York was so kind to link the most famous quote. I think it was one of the most famous Wall Street quotes about bull and bear markets. This is the whisper wall. And I think it goes, bull markets start on pessimism or grow on pessimism. Bull markets grow on pessimism, die on euphoria. This is the food hall, food court here at Grand Central Terminal. Yeah, very echoey here. It's the Oyster Bar. All right, team, I got to get you guys home. So let's walk out to Madison Avenue and let's head back down. Wow, Carl, yeah, Hang Seng is up 2.3% so far. See, okay, guys, we really got to watch this because October 31st, I remember the exact day. I know where I was. So October 31st is the day Hang Seng Index bottomed. We've rallied significantly, I think 38% off the lows, all while some very, very well-respected PMs on Wall Street, by the way, have been coming on CNBC and saying that China is quote-unquote uninvestable. And yes, we've talked about all the positives and negatives. We get that, right? And I've actually been very vocal about it too. But that is the perfect recipe for a bull market to be brewing, is skepticism. And at the end of the day, price action tells all. And if these Chinese ADRs can break above major key moving averages and continue to run, I think people will be surprised. I think people will be really surprised this year. So we'll see. We're gonna bang a left. Now we are gonna start up the newsletter again. So if you guys wanna hear more detail on my market thoughts, feel free to subscribe to the Behind the Street newsletter. It is free. If you type !news, NEWS in the chat, punch in your email. We are now going to be migrating over to Substack because Elon Musk decided to close down Review after he bought Twitter. We have Library Way. Notice how quiet Madison Avenue is. Hey, Big Talk, thank you for joining us. Hopefully we see you tomorrow. Wishing you a good start to 2023. Hey, Kumar, since we talked about China, but I think I've noticed that India markets are near an all-time high. That's super interesting. Yeah, Indian equities have been performing fantastically over the past couple of years. Really, really well. And I think a reason for that is because India has a very, very fast growing population and a very, very fast growing middle class. So I'm actually very bullish on India as well. Yeah, Ed T says New York City a lot more empty now, you're right. It's a good observation. Oh, it looks like the bus is getting towed. Check this out. Looks like it broke down. Yeah, Dr. Longus says India makes a very good competitor to China. You're right. You know, I'll sort of comment on that because as an American, I'm very selfish in the respect that I want all the top talent and all of the top companies and all of the new innovation, selfishly, I want it to happen here, right? Sorry for anybody who's watching the live stream outside of the US, but I'm sure if I asked you that question, right, wherever you're watching from, be it Canada or any country all over the world, you'd probably say the same thing. You know, you want people who are exceptionally smart to start companies and live in your country, right? And the United States, I think, is teetering on the brink of making a big mistake. And I'll expand on that, what I mean. We're about to hit the Morgan Library, which is one of my favorite places in the entire city. Now, a lot of the innovation that has happened in the United States, again, I'm not saying all, but there's a good portion, has been due to the H-1B visa system. And the H-1B, let me just give you guys a good shot of the Morgan Library. We're coming up on it right now. Now this is sort of like the gift shop on this side. But The H-1B visa has done so much for economic growth and economic prosperity in the United States, it's not even to be believed. And recently, I would say, over the past 7 years, we've been increasingly making it more difficult for people, very smart people, to achieve and get an H-1B visa. And that is a big mistake because they'll just go to some other country. They'll go to Canada, they'll go somewhere else to start the business and be an entrepreneur and bring their mental and intellectual capital. Here's the main doors here, the Morgan Library. And I think that's a big mistake. So hopefully we could expand and make it a little bit easier for very smart, educated, and ambitious people from all over the world to come here and continue to build businesses. All right, East 36th Street. Wow, it's 57 degrees in Manhattan. You guys see that? Really warm out tonight. This is the CUNY Graduate School, or the CUNY Graduate Center. I've actually never been in here, but I would like to go because they do have a pretty interesting library. Maybe CUNY alumni can get in. I'll have to do some more research on that. Wow, Michael Joseph says it might hit 65 degrees tomorrow. Whew, that is going to be awesome, man. Please, God, I love it hot. That's the perfect weather. If New York City could be 65 degrees in the winter every day, whew, love that. Here we have a vacant storefront here. Chan, welcome. Hey, Greg, so I went to CUNY Baruch College. Cool, love that. Baruch is a great school for finance, obviously, named after Bernard Baruch. The CUNY system, from what I remember, obviously I went to a CUNY school, I think it's one application, but you apply to your top 4 favorite schools. And I got denied from every single one of them except one, and that is the one I went to. I wanted to go, I think my first choice was Brooklyn College. I was like, man, this campus is awesome. Love Brooklyn College. I wanted to play on the soccer team, but my grades just weren't that, I wasn't never a good student. I was never a good student. I just couldn't stand it. I just couldn't sit still. Maybe that's why I walk around for 2 hours every night. And I would always get bad grades because in New York State, for all of those who are in New York, I'll enlighten you, we have, I'm sure every state has a state test, but we have ours, it's called a Regents exam. And in order to get a good score on that, you needed to show your work exactly how the state wanted it. But I always found a more fast and efficient way to get the answer. So I'm like, why do I need to write out all this nonsense if I already know what the answer is? Anyway. All right, team, I gotta cut you guys loose. All right, I know, I understand. You're getting teary-eyed, the dopamine hit is going away. It'll come back, don't worry. Join us here tomorrow, 8:30 p.m. We'll talk about the Institute for Supply Management PMI report. It's going to be a critical leading economic indicator that is going to be coming out tomorrow, 10 a.m. Set your alarm clocks. We're going to be doing a deep dive into the ISM PMI report. And we'll see you tomorrow. See you tomorrow. Stephen Bate, Dusty Cole, Wendy England, B. Kim, thank you so much for joining. I Want to Be GMO. Penelope, Wendy England, Pup, Sam Mangano, Matthew M, DM, Bill Matthews, Kevin Sunderland, thank you so much for your very kind and generous $20 donation, Kevin. Have a fantastic 2023. Knock it out of the park. And we'll meet again tomorrow, right back here on Walks on Wall Street. Thanks for joining us, everybody. Into the mighty bull, have a good night wherever you are, because there's always a bull market somewhere. You just need to know where to look. Bye for now.